I guess so.
Okay, well, it's great to be here. Talk about Agile accounting, something.
Yeah, yes.
Let's try this now.
Is the mic closer?
I'll just speak up. This is mostly for the recording, I believe. Well, now.
Yeah.
Yeah, put it closer. Yeah. Well, it's great to be here. Agile accounting is something most folks haven't dealt with hardly at all in our industry. For this particular talk, we're going to try to cover a few things to get us started with Agile accounting. We're going to try to demystify what's going on with Agile project cost accounting. There's a lot of unknowns out there that accountants and IT people are trying to deal with. We're going to talk about some patterns. We're going to map current accounting standards to an Agile project accounting model. And we're going to try to build better partnerships between the IT folks, the Agile folks, and the accountants. Now, we have partnerships already built over the years, but this is something different. Agile is different than Waterfall, as we all know, and therefore Agile accounting certainly must be different than Waterfall. So how are we going to do that today? We're going to do 4 things. We're going to have some lightning talks, myself and Pat. I'm going to start it out. I'm going to hand over to Pat. She's going to talk about challenges that are facing us with Agile accounting. We're going to do some brainstorming together in some breakout sessions around the room. And we're going to share our learnings and conversations after we get done talking in our breakout sessions. We're going to share what we brought up. And then we're going to do guided group solutioning with Pat and myself to try to wrap all that up. So a couple of takeaways today, some key learnings we hope we can impart. How about a deeper understanding of accounting principles and perspectives? We're going to revisit accounting, try to get our feet on the ground. And then we're going to try to come up with some practical ideas for solving enterprise-level Agile accounting and related problems. Put this in for a little background on where we're at right now. We have, as we all know, we've seen explosive growth of technology in the 90s, a lot of growth in Agile. It's really hitting the adoption curve right now, and it is not going away. The financial folks are not really aware of that, but we are gaining traction in Agile. It's really exploded in the last 5 years, and it certainly is going to keep up that kind of pace. We have to have a recognition that internal software developed via Agile should be capitalized differently. We know that we develop software in iterations. We know that planning is done within the iterations. Unlike Waterfall, planning is done up front. So Agile kind of breaks up that paradigm. And that's certainly not in alignment with the way the product is capitalized today. So mandatory accounting guidelines right now require standard accounting stuff, standardized financial reporting, reduce inconsistencies across companies. We really want to avoid inconsistencies. It's killing us right now in terms of Agile cost accounting. People are doing things differently within companies and across companies. Everyone is confused out there. That's where we stand. And this really, what you're after is to better enable investors to make informed decisions about how well a corporation is using those dollars to develop software. It's a measurement thing across companies. So guidelines, really, the Agile standards are guidance is what we're trying to develop here with Agile software. Better guidance in how to capitalize and expense Agile projects. So Waterfall is split up into 3 phases. First is the design phase, next is development, and the third is deploy. Agile accounting is going to take some of those phases and blend them together. And we're going to capitalize things much faster than Waterfall did in the past. So we're also going to change the way things are done within the phases. We're going to capitalize more of the cost. 2 big benefits. We're going to do it a lot faster than Waterfall, and we're going to capitalize more of it. Now, a lot of accounting folks are very leery. They're very conservative when it comes to capitalization. They don't want to restate earnings. They don't want to get into the trap where mangled Agile implementations, which we've seen a lot of around here, forces them to do just that. They don't believe that these things are leading them down the right path. So if you're going to be conservative, what you want to do is expense everything. And we see that happening out there in the Agile community. You just expense the entire project, all of it, leaving a lot of dollars on the table for depreciation. So what's going on? We got alphabet soup here. We've got the FASB, which is the Financial Accounting Standards Board, which is an animal that is primarily responsible for establishing GAAP, which is generally accepted accounting principles. That is a pretty thick book. If you've ever seen GAAP, it has all the guidance that accountants need to book costs and handle all accounting functions. Within that book, there is ASC 35040, which is internal use software. It's not very lengthy. They haven't gone into it in any kind of great detail. It's based on the waterfall model with the 3 phases, and that is about it. There's no mention of hardly anything else. Now, the American Institute of Certified Public Accountants, SOP 98-1, that is very close to ASC 35040. They're about the same language, so if you look them up, you'll be reading essentially the same thing. And still, they're both written around Waterfall SDLC. They've been around for decades, and they haven't changed. Nothing has changed in decades. Let's hold our questions until later. I'll move through it. Pat's going to touch on all this as well. So obviously, corporate accounting policies have been applied using the SOP 98-1 language. It's conservative. It's what you can count on. That's what we're up against. Now, if we want to get our Agile accounting standard adopted, we're going to have to go through these folks. We have to go through the ICPA and then have that inclusion into GAAP, and of course, that will be accepted by FASB and the Securities and Exchange Commission. It's a long road, but it's worth it. There's a lot of money on the table here. So I think if we can make our accountant counterparts understand what's really happening in the Agile world, and if we can execute better than we have in the past, they're going to go for it in a big way. Millions and millions of dollars on the table. But it's the conservative principles that make them stop and think twice. There you go. Accountants value accuracy, predictability, embrace principle. Accountants don't understand Agile. They don't understand Agile guidance. They really don't care how Agile works in terms of developing software. They want to know how to book those costs, and they need guidance on how to do it. So they don't understand how to deal with it. Is their problem? They need guidance. A couple of things here on the bottom. These are things that accountants know and love and hold dear to their hearts. I think the 2 that affect us the most are the consistency principle. We have to be consistent on how we handle transactions. We have to be consistent internally in the company and consistent across companies. Guidance helps you there. And conservatism stops us cold if we don't execute properly. And I'm going to hand it off to Pat, who's going to handle some of the tough stuff. Good job.
Thank you very much, Walt. And if you just give me the clicker, I'll use this mic. Thank you very much. This one forward? Great. Thank you very much. What we ought to do is make sure that we fully understand the problem before we spend the rest of the evening working on the solution. So in that spirit, did we have some questions? Did you have a question? No? Okay, are there any questions that we want to make sure we cover tonight to fully understand the problem before we actually jump to a solution? Yes.
Because of the speed of the delivery, you actually look more like something that should be expensed than the traditional process. Because in the traditional process, you set aside a lump of money that's a 1, sometimes 2-year project, even if you deliver a little bit sooner, and they can figure out what the return's going to be. But when you're doing Agile and you have several delivery points in rapid succession, you look like something that should be expensed. So I'm a little confused about the statements you've made so far.
Great. Well, and I'm glad you brought up that confusion, because there is a lot of confusion out there. In fact, I've been solving this problem for the past 6 years, and there aren't a lot of solutions out there. There's a lot of patterns and paradigms, so I'm glad that you brought up that particular paradigm. And that's one that we're going to be tackling this evening as we take a deeper understanding of what we really need to understand about accounting practices and how we need to map those accounting practices to our Agile practices and partner very closely with our accounting friends to come up with a solution. Because this is not a solution, this is not a problem that we can solve alone as Agilists, nor is it a problem that we can solve alone as accountants. But it's very important for us to kind of build that relationship. So as Walt kind of walked us through kind of the essence of what the challenge is, the challenge, the language in accounting guidance was written in the 90s, and it was written along a waterfall framework, because that made perfect sense, right? And if we, as Agile leaders, are running projects in a waterfall fashion, it's very easy for us to interpret what's the analysis, and what's the design, what's the development and testing, along the 3 phases that the accounting standard language is written in: the preliminary project phase, the development project phase, and the post-implementation phase. And until FASB actually creates an accounting standard, we are constrained and we do need to support the current language and current accounting principles and practices in finding a solution, which is exactly why we sometimes default to the fact that we need to expense all Agile project labor costing, which is actually not necessary and it's not really the right solution. So going over very, very quickly what we know about the Waterfall methodology and comparing that to the Agile methodology at a very high level. Basically we go through, that's why we call it Waterfall. It was developed in the 1970s by Royce, and he felt that a more predictable way for us to develop software, which is a very challenging effort, is to make sure we complete the analysis before we actually start to do the design, and before we do the actual development, that we complete the design. Ring a bell? Kind of sound familiar? Okay, we also know that in an Agile project, a lot of things change. We actually do a little bit of analysis, design, development, and deployment in each iteration. And this is a trap that all Agilists fall into in terms of trying to find a solution to this dilemma. Sometimes what we know gets in our way of what we need to know. So basically, how do we as Agile leaders actually try and solve this problem and come up with a defensible and consistent Agile accounting practice that will enable us to optimize our project labor funding and costing and be true to the spirit of the Agile accounting principles as well as Agile principles and accounting principles? That's what the session is going to be about tonight. We're going to take some deeper dives. We're going to break out into a couple of work groups and really make sure that as we leave tonight's session, we have a deeper understanding and we won't fall into the trap that all the other Agilists before us have fallen into in terms of how to solve this problem. Now, I noticed a lot of you might be taking photos. David will be making this slideshow available. Is that correct, David? And we're videotaping this as well. So all the material here tonight that we're going over will be available for you, as well as some slides that we've currently hidden in the spirit of trying to maximize our time together and focus on coming up with and fully understanding what the challenge is, addressing your question and any other questions that might be out there, and what the issues are. What we're going to do now, before we actually get started on solutioning, is we're going to do some breakout groups. What we've done is we've organized around 3 different topic areas or exploratory idea areas that we thought might be of most interest to you. Because this is a compound problem, we are going to need to understand not only how accounting principles work, but why our accountant friends behave the way they do, which sometimes mystifies us, and why they don't understand how we behave, which sometimes mystifies them as Agilists. We are going to need to tackle that at a very deep level in order for us to really solve this. We cannot, as Agilists, solve this in a vacuum. We need to really solve this through the lens of accounting. So we need, as Agilists, we need to solve this through the lens of accounting and understand just what those principles are that make our accountant friends so frustrated by some of our practices, and we need to be able to understand this to kind of build a trusting relationship. So David and Terry, our expert accounting guru, are going to lead us through, for those of you who are interested in that particular topic area, they're going to lead us through a breakout group in the room over, kind of in that separate room by the ping pong table for the next 20 minutes. Terry's prepared a pretty cool script that will kind of say it all in terms of what we need to understand about accountants. So that breakout group is going to be focused on why is Agile accounting such a point of friction for accountants, and why is it that accountants always take the most conservative approach, and want to expense everything, as opposed to running the risk of ever having to re-report earnings, and just how sensitive and hot a topic that is, so that we really understand that, and that as we come back together after the breakout group to do collective solutioning, we come up with a solution that is going to be defensible and is going to work from an Agile accounting perspective. Walt is going to walk us through at this kind of breakout group area here, for those of you who might be interested in really doing a deeper dive on Agile practices and comparing Agile practices to Waterfall practices, you know, through the lens of accountants. What accountants really need to know about why Agile is the preferred solution in terms of how it adds to predictability and how it actually adds to the conservatism principle of accounting principles. So he's going to walk us through a breakout group in this section here, and I'm going to walk us through a breakout group in the back on just exactly what is the problem, why is it so difficult to understand, and why do we fall into the same trap. I'm going to tell a really brief story before we break for the breakout groups. I had to start to solve this problem 6 years ago at Gap when my responsibilities expanded to include IT finance, and I did the natural thing that any Agilist would do. I consulted the experts and tried to find out who was doing the solution. What was everybody else doing? How were they solving the problem, right? And I was very surprised to find out that not only was there nobody that had a solution, the experts gave me the wrong advice. They told me exactly the wrong thing to do. This really baffled me 6 years ago. What baffles me even more, 6 years later, after I've talked to hundreds of organizations, you know, they're still making the same mistakes. Even just about a month ago, I ran into a very popular blog from an Agile expert who was advising the absolute wrong solution. You know, I was trying to kind of course correct that and make sure that tonight we're going to walk away from this session understanding what the right solution is and understanding not only why those organizations fall into the trap, but how we can avoid the trap. Now, Dan's in the audience tonight. Dan Greening had solved this problem for Citrix as well. Dan's the only other individual that I've run into in the course of the last 6 years who's come up with a defensible solution. And so he can share kind of what his story was at Citrix Online as well. And he went through this same pattern and he discovered the same phenomena. Now that fascinated me, and I thought that we would, as I kind of lead through the breakout group, we would talk about why is it that Agilists fall into that same trap. The pattern, or the pattern that's going on there is really sometimes what we know gets in the way of what we need to know. And so that's really the paradigm shift or the mental model that we're going to have to tackle tonight. How do we get out of our own way as Agilists and make sure that we see the deeper understanding and the spirit of the accounting law as opposed to the surface interpretation, which is responsible for those CFOs out there actually requiring that Agile projects be all expensed, because the language of the legal and accounting guidance is written in the language of Waterfall. So does that make sense? So for those of you who, if you have a strong, compelling interest in any one of those topic areas, you can join David and Terry, the accounting gurus, who are going to be walking us through. David's the accounting guru wannabe, by the way, who's going to be walking us through. Who's going to be? He's the unaccounting guru, but he's going to be facilitating from an Agile perspective. They're going to be walking us through a deeper understanding of what we need to know and understand from an accounting perspective over the next 20 minutes. Ainsley's going to be our timekeeper. She's going to ring her chimes after 15 minutes so that we can consolidate the learnings and the discoveries and the exploration from that group. And we'll be presenting on the idea gallery up front the outcomes of each of the groups. And then for the rest of the session tonight, I'm going to be walking us through a solution that's defensible, and it's Agile, and it's accounting friendly. And we're going to be incorporating what we come up with as a group from the accounting team and from Walt's team as well. Walt's team, again, is going to be talking us through, he's going to be facilitating a guided discussion on how we sell Agile to the CFO. For the CFOs and those accounting friends out there who already kind of got burned on Agile or kind of very suspicious, think that we're a bunch of cowboys who are just kind of running amok, we don't plan, we don't document. You know, why would we want to invest our precious capitalization funds in an Agile project? How we can actually change their minds by taking a defensible, an empirical look at why Agile really is preferable in terms of the methodology of choice from the perspective of accounting and accounting standards. Does that make sense? Then I'm going to be walking us through why do we keep falling into those kinds of traps? And how can we learn this mental modeling kind of paradigm shifting, not only to solve the accounting problem, but also to solve those other problems that we run into for those natural points of friction that as Agilists and as Agile leaders we often run into. And you probably know exactly where those are. That area of DevOps, the areas with external audits, areas of compliance. These are natural points of friction where we run into these same sort of challenges. And what we're learning tonight, kind of the patterns that we learned tonight in terms of how do we actually check our judgment and suspend our judgment, if you will, in terms of what we know, and suspend that for a moment and learn what we need to know to actually solve the problem. Anytime you run into a organizational problem that gets emotional or gets really intense or, actually gets your emotions involved is generally a red flag for you in terms of this is one of those areas where you can apply these mental model techniques to change your paradigm and really test your sense of advocacy, of understanding where the other party is coming from so that you can actually work towards an effective solution. So everybody know what we need to do. The next 20 minutes, we're going to get up and kind of go to the groups. You're welcome to float from group to group. If you have interest in all the areas, you might want to just float and contribute and listen and kind of learn from each of the working sessions. Then we're going to come back in 20 minutes and share what the highlights of what we've talked about. And we're going to work together to apply those learnings to a real solution that you can take back to your organization or to your clients and really coach them through what's important to know to solve this once and for all and not fall into the trap. Cool? Excellent. So Walt's at this station. Terry and David are in there, and I'm going to be back in the room. Thank you.
Where'd the handheld go?
So you actually spend
Pat? You know where the handheld goes? Yeah. Oh, there it is. Yeah. Sorry, that's it. Oh, yeah, yeah.
well, then that should have told them to capitalize it. Instead, they were just doing the running trail.
I will, but I think it's a mistake. Pat, we need you to... We need you now.
No. Lady at the bell, we need you now. Come on.
I don't know.
Nice.
So we're recording again, so we can give people that mic to do their report backs from each
Cool. Thank you very much, David. Okay, that time went by fast, didn't it? Is there anybody who might be able to help me load the deck back up there?
Yo, cameraman.
Sorry, just to get the deck back up, kind of to guide the
Escape this?
conversation. So great. Did you find the breakout groups?
Yeah,
helpful?
just fire it up. Go up here
Excellent.
and
Thank you. Now what we're going
Come
to
up
do
to
next
slideshow.
is we're going to hear
make it
a
into a
report
presentation.
from
Go on
each
the
of the
slideshow.
breakout groups, sharing the highlights of what we've learned. And we're going to use that as a
Sorry, I thought
lens
it was
to
you
walk
guys
us through the
first time, my bad.
solution
Oh, that's good.
so that you won't
Yeah,
fall
it is.
into the trap and that you fully understand
Okay, you're set.
how to solve this problem for your own organization. Does that make sense? Cool. Going the wrong way. Okay, while I get this squared away, would David and Terry, is there a spokesperson from the accounting advocacy group?
There is.
Excellent. And his name is Cesar.
What a
Cesar.
volunteer.
We got a handout. It's a really good handout.
Earnings per share and everything.
Yeah. So
We're all
So
upset.
Terry did a fantastic job in framing the context in terms of the reality of the accounting team that we ignore or never bothered to really find out much about. And it wasn't so much about the standards and the rules, although we started to go in that direction. It's more about what is the consequence of getting an outcome which is significantly different, and significant might be as small as 1 cent per share difference between the prediction that the accounting team that financed the company, the CFO, has put forward to the street, and the actual result. And we also actually played out the skit in section 2, where the CEO, the CFO, the VP of Finance, and the IT director had various exchanges. And despite the IT department succeeding and exceeding expectations with their adoption of Agile, they still caused the company a 5 or 7% drop in market value because of that missed estimate. So one of the things that we discussed was how is it that how is that even possible? And really the reason is that precision comes from how it is that you treat the work that has been going on. So the difference between being able to capitalize the cost of that particular project over multiple years and having to take the hit all at once up front that quarter maybe as an expense has that kind of an impact to the performance of the company. And that is the consequence or the byproduct, unintended byproduct of even successful Agile adoption. So it was very enlightening. Thank you, Terry.
Thank you very much, Cesar. Thank you, Terry, for the script, and David for facilitating that. David will make these material available for those of us who didn't participate in that breakout group. But I hope you found it very valuable in terms of understanding why it's so important for us to understand this and things that don't make logical sense to us as Agilists, and get inside what the priorities are for our accounting friends whose livelihood and careers depend on accuracy and consistency and predictability, and why it's so important to pair with them and pair with our friends who are in internal audit and external audit and the CFO and understand why this friction happens and use this sense of advocacy to actually solve it. So thank you for that. Okay, in the second group, pitching Agile to your CFO. Does anyone want to be a spokesperson for what came out of that group?
Let's go.
Awesome.
We got 2 guys.
Awesome.
More than one. So we had a lot of discussion about companies that actually deliver software on a yearly basis. They don't deliver as rapidly as a lot of folks do in Agile. So is capitalization different for companies to deliver yearly, or is it the same as Waterfall? And we think it's pretty much the same as Waterfall. The advantage of Agile is that you deliver software faster than yearly increments. So we also talked about Agile delivers benefits via depreciation faster than Waterfall. Depreciation earlier is better, so you can start doing it on a quarterly basis. We talked about design architecture requirements. Tasks can be included within iterations, which means potentially that you can capitalize those costs as well.
You can capitalize your product managers.
Awesome.
Not all of them, but part of it. You can, because those product managers are handling that guy, right? Someone just want to be capitalized on them? So Agile can also increase execution reliability over Waterfall, so you can prove over a period of time that you can deliver product consistently, whereas Waterfall would take you a longer period of time to prove that you can actually deliver, and by that time, you're way down the road, 1.5 years gone. So if you can get a couple quarters down the road, you've delivered properly, and perhaps you can influence finance to capitalize, costs much rapidly, much faster than you did before.
Can I come in?
Yeah, go ahead.
So I work for a large enterprise software company, and we can only release once a year in general because most customers don't want to take something all that often. However, if we had the ability to release every quarter, there's always some customer that's going to be willing to put this in production. And if you did that for a year where you made 4 releases and at least one person put it into production every quarter, the next year you could go to accounting and go, look, every quarter we made a release and every quarter somebody put it in production. Let us start capitalizing quarterly instead of every year. And I work for a backup company, and I can see how we could do this.
Hey, go ahead.
He's got it in the next.
So yeah, you can prove delivery faster. We talked about that a little bit. Greater confidence based on track records. So that's what he's trying to drive at. And that's what we have.
No, you got
And if you've got a services organization, which includes customer service, you can use an agile model for pricing that services business. That is that we were here, I think, a year ago, just down the street, listening to the agile model for services. That is not time and materials. It's not fixed price. It's a hybrid that gets customers and businesses on the same page, working from the same hymn book, and raising the basically the hourly price that your people are being costed out at, and delivering sooner and getting your resources back to be able to apply them to other services engagements. So it's got that advantage as well.
Great, awesome insights, you guys. And I'm going to kind of pick up on David's invitation that we started before we even started this session tonight, to encourage you all to consider participating in an extended community of practice, not only in terms of value engineering, but in agile accounting, and come up with additional ideas, because there's a lot. You found a lot of great ideas and great insights that are huge potential to organizations. There's a lot more to be found. So what we're going to do is kind of factor in what we've heard from both groups after we hear from Dan, who's going to walk us through what the other group walked through.
Okay, so the very first question was, I think, a question a lot of us had, which was, why do we capitalize? We capitalize because for 2 benefits. One is for our investors who are looking at a consistent behavior, a consistent profitability in the company. And another is tax reasons. So with investors, when you invest your money in building a piece of software and then you stop developing, the costs of that hit you when you're doing the development, but the earnings keep going. So the first year, let's say a 1-year project, you have this huge expense, and if you expense everything, it causes your company to look like it's losing money, even though it's building an asset from which it can earn years hence. And so investors are disturbed by that. You know, losses followed by profit, they don't really understand that. The second thing is for tax reasons, because if you are expensing everything up front and you have a loss, you may not be able to carry that loss forward. And so your tax cost may be higher. Ideally, what you do is you spread that cost of expense forward, and then what happens is it reduces your profitability for a number of years, but that causes your tax rate to be lower in some cases. So the second thing that was talked about was, Pat made the point that we should, if we're going to convert to a new style of reporting labor, that we should be working with auditors early. Because when you do work with auditors early, it makes them feel like they're part of the solution, it helps them understand things better, and then when they're faced with a bunch of spreadsheets and a bunch of outcomes, they understand those outcomes. Whereas if you wait until you're actually reporting stuff and then the auditors come in and say, oh, look at what crazy thing you just did, then you are set on the defensive and you can't really, it's harder to justify what you're doing. We did talk about the distinction between services, which are things that SOP 98.1 and ASC 35040 address. Those 2 standards are about internal software developed as a service, and product, which is covered by a different set of standards, but they're virtually identical. So almost everything that we're talking about with respect to internal software or services, ongoing services, and products that you ship to customers are the same. The one caveat is, though, if you are a consulting company or a contract labor company that is building software under contract and you sell it to your customer and then you never have the ability to earn from that software in the future, you have to expense that. That is not an investment in your company's future that has ongoing revenues, but rather something you're doing under contract and there's a direct profit margin. There was discussion about bugs and the distinction between OpEx
And CapEx.
CapEx. Okay, so some companies talk about CapEx, which is what your longtime developers do, and OpEx, which is bug fixing and operations related stuff. It turns out that both Pat and I have been in an experience where all bugs that we normally think of as bugs are not really bugs in terms of expense. So in classic sense, in SOP 98.1, the bugs are always expensed. But in fact, what can happen is if you're implementing something that has never worked before, in other words, you're fixing a bug that's been present that's kept your product from actually showing a feature, that behavior is capitalizable. So if you're fixing a bug, if you had something working and it stopped working, and then you have to fix something to make it start working again, then that is expensed in the SOP 98. But there's all sorts of subtleties around this that Pat has an enormous FAQ around. And that's about it for us.
Great, I'm glad that you guys found that to be useful. Was there anything that anyone learned out of those breakout groups that we didn't cover that you want to make sure we cover before we go into a collective solutioning? Anything else that we might have missed? David?
I think this is not really a new discovery, but I simply wanted to acknowledge, at least from my perspective, how unbelievably clueless I find myself and my fellow developers in this domain.
Thank you. Thank you very much.
There's a little bit of eye-opening going on, and like, oh my God. So,
Well, and I appreciate that. And Joel, you got
I just want to add exactly to what David said and add to that and how much this actually could be useful.
Oh, yes. I'm so glad you added that to it as well.
I was
this
happy
is-
to be clueless. No, I'm not.
Oh, I'm sorry. This is profoundly important. This is profoundly important to the enterprise-wide scalable adoption of Agile, which is why I'm so passionate. Walt and I are so passionate about that. So thank you for those testimonials.
I have a question too. You talked about how to treat bugs in
Yeah.
terms of expenses. How do you treat testing
Excellent.
and regression testing, especially when we're not fully agile, which means we don't have fully automated tests, so we have a lot of manual expenses.
Great. Thank you. And what you brought up is an excellent way to kick off the next section of where we want to actually solution. But it's a great idea for me to take questions that you might have that are really burning questions and make sure we get to the solution without losing anybody tonight. So great question. I'm going to answer your question with a question. What about testing? What about deployment? What about DevOps? What about creating a continuous integration environment? All of those what about questions that fall into that category, I'm going to toss back another question, and that is the work of testing, continuous integration, DevOps, essential or vital to the creation of the asset that you're building? The answer is clearly yes, right? The customer will not be able to actually use the asset that you're generating to create value to the customer without testing, without DevOps, without continuous integration, without regression testing, right? So if the answer to your question is the work that you're doing vital to creating or deploying or making ready the asset for the customer, even if it's post-implementation performance testing before the business partner signs off that you've hit the mark, then the answer is capitalizable. Does that make sense? So you can begin to see now the point that Joel and David were bringing up, huge opportunities here huge potential for getting it right. Other questions? Raymond?
So, this is a bit fundamental. So far, I have not heard these accounting rules written according to waterfall mentality
Yes.
being challenged. Is it because the rules are itself not flawed? It's just the interpretation of them, or just to challenge these accounting rules is too much a hurdle, or just yeah.
Yeah, great question. I'm not sure I have an exact answer to that, but I can give you my interpretation of it. You know, just as we all kind of shared that there's really no expertise in this area. The accountants don't really speak Agile. The developers don't really speak accounting. Nobody really understands what each other is. And that's the essence of what it is our session is about tonight. I don't think anyone's ever really tackled it, to tell you the truth. When I had to solve this problem, leading IT finance, I was stunned at the lack of defensible solutions or understanding that's out there. You know, David had the courage to share, and Joel tonight, you know, none of us we're pretty clueless as to about what's going on with SOP, right? And believe me, when I first picked up the SOP 98-1 and realized that I had to not only read it but understand it to find a solution, I wasn't excited about the opportunity of having to do that, but I understood how important it was. So right now I am actually directing a program for the Agile Alliance with support from Dan and Walt and Terry as our accounting experts to actually get in front of the Emerging Issues Task Force for FASB to change the language so that it is much easier to interpret. Because as I shared with you earlier, as I've been coaching organizations on how to effectively handle this, I'm stunned at the level of confusion around this, and everyone is struggling. Every organization that I know of is struggling with this. The thing that compounds it is it's not only US based, although this does affect every organization in the United States, public, private, nonprofit. It also affects all the organizations kind of worldwide. The international language is very consistent with the SOP 98-1. So it has tremendous impact. And the reason I'm so passionate about it is, as a member of the Agile Alliance board and kind of being very committed to advancing Agile to the enterprise, I believe this is the #1 blocker to preventing us to really going large-scale enterprise-wide Agile adoption, because the CFOs don't understand it, and they do default, as we understand from the accounting team's understanding, they will default to the least risky group, and oftentimes will not invest. If you have like a multi-billion-dollar project, the likelihood of your CFO investing that as an Agile project is pretty slim, unless you come up with a defensible solution to this. Yes?
So, bottom line, doesn't this evolve down to one question, and that is how to identify which of our activities and work products are assets and which aren't?
Well, that's a good clarification. If you're not creating an asset that adds new functionality, let's add that other dimension to it. Is it an asset, and does it create new functionality? You know, then it falls into the realm of capitalizable. You know, if it is creating value to the customer, if it's creating new value to the customer. One of the things you'll find, and I've got it in the appendix of the deck here because I wasn't sure the level of interest in the larger group, but one of the things you'll find is Walt and I have developed a decision tree that reduces those questions to the point that you're bringing up, as reducing the questions to what is capitalizable. What if we came up with a very simple rule, a decision logic tree, and we've done that for us. So there's more than one question, but that is one of the components to the question. Did I answer your question? Want to try again? Or yes?
I think he actually has a very elegant question. I think he has a very elegant question. Really, it boils down to, is it an asset which is defined by the accountants as a future benefit to the company? And if it's over 1 year, then the asset is capitalizable. I mean, you have questions about testing, about bugs, about getting the coffee, all that stuff. If it goes into creating an asset for the company, then it can be capitalized. Everything else is expense. So it's a very elegant question, actually.
So, where I work, we already have figured out what activities should go to expense versus capital. Now the next challenge is, once you know what activities fall in which bucket, how do you act? What is the best process to allocate the cost to expense and capital? Now, people have been doing timesheets, but other companies just don't do timesheets. And if, even though I'm an accountant, I really wouldn't want to do timesheets either, as a developer. But as an accountant, I need to be able to assign a cost to whatever this specific developer is doing, internally or externally.
Excellent question, and I hope I can answer both of your questions and hopefully address yours as well, and add a little something to Terry's eloquent response to that. And did we get to the heart of your question there, or is it still pending? Cool. Okay. So how I'm going to answer your question as well and kind of walk us very quickly. I'm going to literally spend 5 minutes and walk us through the preferred solution, and that'll answer your question, because I'm going to reframe your question, if you don't mind, to the benefit of the group, in defining what it is the trap is that most Agilists fall into. And the trap that most Agilists fall into is trying to track, even thinking about tracking timesheets for every person on the team by the type of the work they do by the WBS codes, which is the essence of your question. And that is exactly the wrong answer. The reason why it's the wrong, and that's the thing everybody defaults to. The reason it's the wrong answer is it doesn't pass our tests of Agile principles. Is it simple? Is it elegant? It also doesn't pass the defensibility test in terms of if an auditor comes in, and is faced with that profound amount of detail, it does not serve us well. So I'm going to go into a set of tests that I would recommend that we tackle in terms of putting this test together, a simple set of rules or tests that make sure that we use to test whether or not our solution is, rings true or actually passes. The solution we come up with has to be simple. It has to support our Agile principles. It has to be simple. It has to be defensible and auditable. It has to be successfully audited. When an auditor comes in, an external auditor for capitalization audit, it has to be defensible. It has to be consistent with the accounting standards, SOP, and the guidelines, ACP and GAAP, GAAP. It's got to be scalable. It's got to be sustainable. It needs to be easy to understand and consistent in terms of all those accounting principles that Terry and David walked us through. And it's got to be value and risk balanced. Now, if we put forth, for those of us who are Agile leaders, anybody here lead an Agile team or as a PM, or imagine if you went to your developers and you said, okay guys, I'm going to need you to track your time and every minute that you spend every day on, imagine what they would do to you, right? It's not going to work, right? And that is what everyone falls to. They assume that they need that for audits. That assumption is in error when you look at the true spirit of the SOP 98-1. That is, in fact, that is exactly the unsolved or the wrong solution that you will find some experts advise you to do. Cesar.
And in fact, the behavior you get is you get 8 hours of one activity
Totally.
booked in a month in advance.
And that is why it's not defensible or auditable, right? No matter how precise you are, if you try that approach, you're violating the Agile principles. Either we create value for our customer and empower the team, blah blah blah. You're violating the accounting principles, and you're actually promoting extremely bad behavior, because no one is going to actually follow the spirit of the law here. So that is exactly the unsolved. And that's the one thing I want to make sure everybody understands tonight, that that is not a solution that anyone should advocate. So here's the tests, and let's take a look from an Agile accounting point of view, leveraging all the great learnings that we've shared so far today. What happens before iteration 0 or iteration 1 begins? If we take now a new look at the SOP 98-1 and the actual language, and I will make that actual document available for David as well to post for any of you brave souls who actually want to read it, which I recommend that you actually do, because that gives you really good grounding in what the spirit of the SOP 98-1 is. Yes? Oh, not bad. You know, the language itself is challenging, but it's not as bad as the GAP rules, the GAAP rules that Walt walked us through, which is huge. So if you look at this, to save you some time, you might want to look at the decision tree that Walt and I put together, which is a one-page if-then-else statement. And that synthesizes all of the key language from the SOP. And that will be available for you as well. But basically, the language is that there are 3 fundamental phases to a project. And the work that happens in phase 1 must be expensed. To your question, the work that happens in phase 1 is basically feasibility analysis. Does the technology exist that enables us to move forward with this funding with the likelihood that we will be able to develop an asset? You know, what is the probability that we will be able to develop the asset? Is there a vendor that we're going to choose to help us with this? All the initial R&D work that we do up front is mostly usually done by our business development teams or our product managers. That's all expense. So it's important that we know that and that we track that. Now, we do not need to track their hours. We just need to track the labor dollars that were expended before we get from the what to the how. So what we'd like to help you understand is there's 3 fundamental principles to pay attention here to. The first phase, labor costs must be expensed, but that's when we're figuring out what it is we need to do. What is the asset that we're going to be creating? A new payroll system, a new web service, what is it? You know, that high-level feasibility analysis, does the technology exist for us to be successful? What is the likelihood of our success in this? That needs to be expensed. Now, the challenge that we have is you can just lump that up. You don't have to do daily timesheets, but you do have to track the labor costs that are associated with that in a defensible fashion. The next phase is, oh, sure.
So if I have a product management team that spends 3 months devoted to project food,
yeah,
all 3 months times the number of people times the related cost.
Right. Right. Exactly. Right. Without going into daily or hourly or.
Right. If I'm fractionating it along 3 projects,
yep,
a rough allocation of the percentage is sufficient.
Good call out. Exactly right. That's defensible. You know, that's defensible. You wouldn't want to just do 1/3, 1/3, 1/3 because that would raise the eyebrows of your auditor. But you'd probably want to do a defensible allocation strategy that would also serve your needs. It's got to be reasonable. It's got to pass the reasonableness test.
So would that be a function of the projected value of the asset?
The allocation of it? No. No, it really should be a function of the work that they did. In other words, if the challenge of project number 1 required 50% of their time on it, you really should be spending 50% of their time on it, not the projected total or value of the outcome. Auditors do get highly suspicious if you kind of use an approach that's future focused. It should be based on the amount of effort that was expended by the team to do that work. Does that make sense?
But you don't necessarily get into the granularity.
Right. In fact, you don't want to, because that gives a sense of false engineering, over-engineering, or a false level of precision. Ainsley.
Yeah, what you're talking about, or at least what I'm hearing in this preliminary stage,
yep,
sounds like there isn't even a project yet.
Well, generally, you're assessing what it is you need to do. So it's doing what I would call opportunity analysis to determine whether you want to actually get that project going.
Right.
So you're probably looking at the feature set as a project, but it is going to be. You certainly don't have a project team assembled. You haven't done a liftoff. That's pre-work, right?
Right. I was just trying to understand if you actually have a project at that point.
It's irrelevant whether or not
Okay.
what's relevant
Okay.
here, and I don't want to actually get too far into the
Yeah.
weeds.
Yeah.
So we can take questions independently. I'll give you guys all my email addresses. Do you have a question?
So in Waterfall, in the preliminary stage, does it generally include writing the requirements?
Yes.
Doing the design?
That's the question.
Okay.
Design. So it's a
In
great
in
question.
Waterfall.
Even
phase
in
one and two.
Waterfall.
In Waterfall, and then architecture would be the third.
Right.
that
It's
I
a
would ask
great question. It's a great question. But in the spirit of the language of the guidance, the design is what happens when we move from the what to the how, right? So currently in Waterfall, many organizations might be overexpensing because if they do detailed requirements, when you move from this, philosophical space of from what to how, even if it's a waterfall project, those labor costs are clearly capitalizable if you read the SOP 98-1. Now what happens because of our conservatism rule, oftentimes we err on the side of overexpensing those, but it's a great question, Ron, because it gives us that clear, bright line that demarks the differentiation between what it is we're going to do and how we're going to do it, right? And that's exactly where you start, where you focus on, memorializing that date and time stamp so that all the labor costs that happen after that are going to be capitalizable.
So that was my point.
Yeah.
Different organizations have a different rule for when projects are real.
Yes.
Right? The executive sponsor with budget authority
Yes.
takes it to the budget committee and they
Yep,
bless it.
Yep.
From that moment forward,
Yes.
costs are capitalizable by your definition.
Exactly right. And you're absolutely right. Every different organization has a different process, but you're exactly right. When the person of authority has gotten advice from their valued technical teams that we're now ready to move to the design storming phase or whatever it is your organization calls that demarcation, I call it a clear, bright line that moves from the what to the how. Architectural detailed designs. Anytime you do that, at that point in time, you've hit the clear, bright line where all costs are capitalizable, with a couple of exceptions that we call out on the flow diagram. And that is any administrative overhead costs, any training, and any data conversion is always going to be expense, as well as R&D. But everything else, to your question about testing, continuous delivery, continuous integration environment, build-outs, all that is capitalizable. Yes?
Who do you call? Who do you call? That's what my question is. Because there's a lot of domain-specific knowledge that is needed for this SOP 98-1 and the GAP document and Agile. There's a lot of domain-specific knowledge given. Every person has their roles defined, and we can all go in and bring awareness. But who spearheads this? I know right now nobody does, but who do you envision should spearhead this?
Excellent question. And I hope that one thing we've tried to make very clear tonight is that you want to partner as an IT professional. You want to partner with your finance teams, with your accountants teams. Some organizations have a department called technical accounting. You want to partner with them. When I started this work, when I came up with this solution, I partnered with our internal audit teams, our external audit teams. I partnered with our portfolio management team, our IT finance accounting, controllers group, you name it. Err on the side of inclusiveness in terms of solving this together. You do need to solve this as a community, including all the experts who live and breathe. One thing I didn't mention tonight, and it's a great question, Mita, is that what your organization, wherever you work, has internal policies that were framed around the SOP 98-1 and AC 350. And it's those people who write those policies and who live and breathe the execution of those policies on a daily basis, that you need to get involved in a solution. And then you need to work with them to help them understand this dynamic. And then you need to help coach them on how to rewrite your internal policies in the language of Agile. And then you can work with me and Walt and Terry and Dan as we're working with FASB to actually create a standard that is an Agile standard. We are doing some larger work outside of the organizations that we represent because this is an important enough issue and an important enough blocker to Agile adoption. But we're also very happy to coach you. And as David had recommended, you know, we are happy to host educational workshops like this and extended communities of practice so that we can help each other solve the problem. Because it is a complex problem. And it's not a simple solution. Even though we've reduced it into a data flow diagram, you know, and we've tried to simplify it. There's all these buts, you know, except when, those kind of things. Great question, Nita. Did I answer it? Great. Okay, other questions you want to make sure we cover tonight, or do you want me to buzz through in 5 minutes? Buzz. Buzz. David says buzz. Okay. 3 stages. We got the rules about the how and the what, right? And then the next question is the when. And you articulated it very well. Every organization does it differently, but Ron's question was very profound. And that is, when we move from the what we're going to do to how we're going to do it, whether or not we've defined it as a project is irrelevant, but when we move from the what to the how, is that clear, bright line where everything else is capitalizable, and you can lump that up. You can lump the total labor costs, understanding as long as you have a way to track training is expense, administrative work is expense, administrative assistance. Clearly, PM work is capitalizable as well as Scrum Master work, product manager work, anything that contributes to the creation of the asset. And then there's another clear, bright line that you want to pay attention to, and that is the post-implementation stage. So all of us have a different way of managing that as well, but once you have fully tested the capability and the project is ready to wrap up, and you're ready to close out the project, generally organizations have like a 2-week burn-in period or 72-hour post-implementation support or whatever before it turns over to level 2 support. Does it sound familiar? Some organizations have it 3 weeks. Whatever it is your organizational preference is, you want to create that as the clear, bright line. When you're turning it over from the development teams to level 2 support, is generally that demarks the second clear, bright line, where then expense has to happen on any bugs that are identified post that 72-hour period. Yes?
Is there does it indicate the actual customer usage? So, you know, like a popular thing for web services, they're always being.
Yes.
Is that something that matters at all?
Yes, it does matter in terms of when you think about the spirit of this in terms of the asset. If the asset, and it's kind of like the answer that Dan gave us a little bit earlier, if the asset, you want to make sure that the asset is being used and creates value to the customer. Until that happens, you don't start the depreciation cycle, or you don't start the actual expense, right?
So that's to the end user.
To the end user, to the value to the customer.
That implies a gap in time between the time we complete UAT
Uh-huh.
and the time the system starts to demonstrate value. That gap, we can neither depreciate the asset and we need to make everything expense. So shortening that gap.
Shortening the gap is useful, but again, it depends on the individual organization. Like in my world, kind of an e-com, you know, we have a production A/B testing and production implementation within that 72-hour hold. So, but then again, like Joel was sharing, it depends on when the asset is actually released to create potential value to the customer.
Right. But
Right.
I'm saying the end of UAT, you basically have to stop capitalizing. And what you're saying is you effectively can't start depreciating it as a functional asset for some period of time after that.
No, actually, you're going to want to work with your financial reporting folks to determine what your depreciation schedule is. But what I did not mean to imply that UAT User acceptance testing was the final sign-off. Usually it's the implementation, post-implementation testing, where you're doing the performance testing in production, that you can capitalize all the way through that period, as opposed to the UAT testing on a particular story. But I'll answer any detailed questions on that a little bit later. David's going to encourage me to buzz through this pretty quickly, the rest of this, okay?
Because we have a request to be sort of done by 9, which is 15 minutes.
Yep, and so I'm going to buzz through this really quickly and hold any questions until a little bit later. So the what, the how, and the when, are the things we want to pay attention to. This material will be available to all of you online, and I'll be available for questions either tonight or later. A little bit of graphs kind of sometimes help. Thanks to our friends at ThoughtWorks who wrote this out. The question Ainsley had earlier, any of that business case development stuff up front is all going to be expense. When you actually get to the point where the project team starts to assemble and define what it is the design of the solution is going to look like, is your first clear, bright line. One way to call that out is design storming, if you're using the language of Agile inception and design storming, quick starts, whatever the language is you use. Your point, Ron, was one when the detailed requirements are flushed out and you determine how it is you're going to solve the problem, you can start at that point in time to capitalize. You do need to memorialize that and capture that in the form of an approval to capitalize, to move forward with capitalization that you need to pull out in defense of your audit that's going to be happening. So there's a little bit of pre-work that has to happen there, but there's that clear, bright line. Another way of looking at it would be with this picture. Basically, anything that happens before inception 0 would be expense, and after inception 0, or as you get into inceptions, would be all capitalizable through post-implementation deployment or end-user acceptance in production. Does that make sense? So all of your CI, all of your DevOps, all of your build-outs and moving code and making that asset ready is capitalizable. Cool. Okay, great. Clear, bright line. That makes sense, right? Stage 2, development. Everything that's happening in development can be capitalized with the exception of administrative work or training or data conversion. And there's a deeper reason for that, but basically the problem is that those people that we're training might not be around for the full depreciation cycle of the asset. So we err on the side of conservatism for our friends in accounting, and we make sure that we expense the actual training that happens. If we're developing training material that can be bundled as part of the asset, that training material that we're developing can be capitalizable, right? Cool. Same way for data conversion. If we're writing programs that do the data conversion that can become bundled as part of the asset, it is perfect. And if it's the actual data conversion itself, which is the one-time only throwaway, it is expense. It's as simple as that. Cool. Post-implementation, that's the other clear, bright line. And that's the decision that has to be made at each organization, whether it's 72 hours or 2 weeks or 3 weeks or whatever that reasonable period of time is, where we're burning in the product and we're making sure that we've done what we said we're going to do. That's capitalizable, but when we turn it over to production support to our level 2 folks, that's when expense begins. And then any bug fixes that emerge after that point in time, it's all expense. Cool. Pretty simple, huh? Discussion, Q&A. We did it, Dave. David? Awesome. Great. Yes, Ron.
Raymond asked a really interesting question earlier of why accountants weren't on board with this already if it was so simple or whatever. I'm not sure how you phrased it, but the similar question is, why isn't all of senior management, why isn't everyone outside of development and product organizations on board with this? And in fact, most of organizations aren't. Yeah. And the intriguing thing about this evening is if we get the accountants on board, we've got a really good chance of getting the rest of organizations on board. And this is really interesting.
Yeah. And a lot of them like to be creative. So
Great insight.
I want to
we're not against it.
give you a really quick answer to that. About 2005, when Pat was working on her kind of first iterations of this, I asked her to come talk to the HP Agile Special Interest Group. And she gave me an abstract of this and what it was about. I sent it to the SIG. The person who was running things at the time said, fine. At HP, he showed it to his accounting people, and they said, no way are you bringing this in. It will look like we don't know what we're doing. We don't want to hear it.
They freaked
They've
out.
totally
Thank you for
freaked,
sharing the
and that's
story.
part of the reason why it hasn't happened yet.
And you know what? Thank you for sharing that story, Ainsley. And you know what the cool thing is? The more they freaked, the more excited Ainsley and I got about that. Right? And when I went to do the presentation at HP, I was prepared for anything.
Yeah.
I was prepared for any level of hostility, and we got it.
We got it.
We got it,
Because
right?
we did it anyway.
We did it. To their benefit. Actually,
Yes.
HP was very appreciative of that.
So the comment, and perhaps there's a question in here somewhere, but the comment that I wanted to make, which also goes to your question, in an instance more recent that Pat was kind enough to give me some guidance and some earlier version of this material to help me with a long-term client. The situation was such that timesheets were being captured, as we've covered earlier, and it was life was relatively simple for the accounting team until we came in with Agile, because everybody was given the specific cost code against which to book their time for the specific asset. So the demarcation of asset was very clear, and it went right through the IT organization, and it matched the hardware. I think Bill mentioned that earlier in our group. It matched the hardware that was being used for that particular purpose. But the thing is, this, and touching any of this, accounting is driving our hierarchies in our organizations. It's driving our organizational structure. If you look at exactly how we're structured and how we define our roles today, it is in alignment with these rules. It is in alignment with accounting. It is driving our offshore strategies. I mean, it touches everything. And this is why they don't want to change it. This is why they resist until we have something that is testable. Until we have something that, in the same way that the current interpretation of the current rules support all of these activities, from budgeting to offshoring to role definitions to everything, if we're able to give them an equivalent, compelling way to support that also supports those things, then we'll be able to start getting some traction.
Great observation.
Thank you, Sabah.
Yeah.
So, I mean,
We need to wrap up.
Sorry,
A
sorry,
couple
sorry.
more minutes.
Two more questions,
I mean,
right?
it was a fast observation and then a question.
Yeah.
So, I mean, it sounds like the easiest way to prove anything is to, to convince CEOs that they're going to find a few extra pennies per share each quarter, and then I think the accountants will magically fall in line. So, are there good case studies out there that actually have hard data of without Agile accounting, with Agile accounting, and what that actually means to a public company?
Yeah. So,
And where can we find it?
well, first of all, you won't find it publicly, usually. But I can talk about it in this case. So Citrix Online, which had about $100 million development budget per year, captured an additional $10 million in capitalizable costs per year. And when we made this conversion, it took me a year to convince the finance people that we should do it. And the excuse I got, I was able to use, so that they didn't look like they were dummies before and now they're smart. It was that we were moving to Agile, and it changed the way we thought about all our processes. And so that movement to Agile was why these changes occurred. But then when the $10 million hit the bottom line, there were discussions at the board level, and the CEO kind of got mad in a way, because he said, well, why didn't we spend more money on engineering? We had $10 million extra dollars to spend on engineering.
Part of the paradigm shift.
Right, and so this and finally, I think the reason that finance people freak out, not only because they look like dummies maybe, but is also because the risk to the company is high if we get it wrong.
Exactly.
So if we got it wrong and we got $10 million and then we went back and said, oops, we gotta credit. So then that's a problem.
Was that ever publicly tested? I mean, is the SEC or somebody ever publicly scrutinized something like that?
We had a detailed analysis that we went through auditors with, and some of it was subjected to. We looked at the law that was the basis for SOP 91.
So we need to wrap up for now. I want to encourage this conversation to continue in a variety of ways. Well, no, there's a couple of things. There's a couple of housekeeping details we want to complete. First, I'd really like us to thank Pat